What's going on, everybody? 360 Digital Closing Bell here. I am your humble correspondent, Michael Tanner, joined as always by the executive producer and the purveyor of the show, Stuart Turley. Stu, how you doing today?
I'm doing fantastic. It is a beautiful day, and happy Mother's Day to all the Mother's Day, even though this is dropping on Monday. Had to have been a good weekend.
Yeah, a little inside baseball. We record this Sunday mornings, but we get this show to you every day, Monday. And yes, happy Mother's Day to all of the mothers out there. We are joined live from an undisclosed location here in Denver, Colorado. That's where I am. Stu's out in Dallas, so we've got a little mix of everything going on. We have a great show for you guys lined up. Episode 15. We're going to be covering really, so I've honestly been feeling under the weather the past week, and we just agreed that last week was maybe sort of a down week for our show. So I have sort of like 4 or 5 things we have to get to. And so the segment one is going to be more of I'm calling it random story time. We got a bunch of different things to come to, a lot of different things that fire me up. As always, we will look at the week upcoming in energy. We're going to check in with the portfolio, and we're going to give Stephen and Nick a call. They've got some really interesting things to chat about. But as always, this show is brought to us by our friends at Untitled Energy. I love everything about this company and what they're doing for the ESG space. And they're really asking the question, what is social risk? And what does that mean for the energy sector? It's not just community opposition anymore to development project. What it is, it's everything from the success of the divest from fossil fuels movement to the investor engagement in an ESG program and the individual states setting ambitious climate and decarbonization agenda. It really seems like it's everywhere now, and it's moving so quickly. I mean, I can't tell you how many different times I hear this in an earnings call. I've sat on so many the past 2 weeks. You don't know how often ESG comes up, and that's why your company needs a strategic partner to help you assess and prepare for all of the shareholder and institutional pressures that come on your peer companies. And Adamantine Energy is the leading consultancy to help oil and gas companies navigate this. They're led by Tisha Schuler, who's the former CEO of the Colorado Oil and Gas Association, and they provide guidance on all types to expose your exposure to social risk. There's so much stuff they do; it's unbelievable. I mean, really, if you have any questions with ESG, just check them out, www.energythinks.com. We love them. We also did an interview with her about 2 weeks ago, so if you want a little insight on what her mindset looks like, she also hosts a podcast called the Energy Thinks Podcast. Please check that out on iTunes, Spotify. And that is who our show is brought to you by. We love them, and we appreciate them helping you bring this show every week. Before we dive into our little random story time, as always, you got to subscribe to our show, The 360 Closing Bell on iTunes, Spotify. Follow us on LinkedIn. Do everything that makes the algorithms go nuts. We have so many interviews that are dropping on the Energy 360 network. Lucas Bio drops Tuesday. I'm in the process of cutting up a Michael Moore special that hopefully will drop sometime next week. We have an interview with Sproul, don't you? When's that dropping?
Oh, you bet. That one's dropping Wednesday. Both of those interviews with Locust Bio and Sproul are fantastic.
They were fantastic, and there's so much good information that I got from this Sproul episode that sort of kind of guides the way I've been thinking, and I'm really excited to get that drop. Partly why I love doing this job is we get the inside information before we release it to anybody, which is really nice, and we really appreciate those guys coming on. But as we get into the show now, like I mentioned, I honestly, I thought last week was a little down for me. I pounded out. We only did like a 29-minute show on Friday, which is not nearly enough to cover what happens in the energy markets. There's so much more that we're missing out on. And so there's like 4 stories that we need to get to. And I couldn't really settle on one opening sort of segment to kind of start this off. So we've got 4 different things I want to work into. And the first one being this Bloomberg trading story that I saw. And if you I've been getting hit up a lot about how do we get in on this negative pricing. Well, I'm going to give you an idea of what happens when you try to get in on the negative pricing. I'm just going to read you this article, and I'm going to highlight it. This is a Bloomberg article that was written, I think, on May 5th. Okay. And so this is a guy who has an oil futures account and did what a lot of people are trying to, hey, how do I get in on this negative pricing? I'm going to redact his name. I'm going to say blank usually buys and sells stocks and currencies through his Interactive Brokers account, which is IB is one of the top futures and stock trading platforms. I use Interactive Brokers only for equities. So I like their platform. I'm a user of them, and this scares me when I see that. And I mean, I don't do futures through them. This is another shameless plug. I use AMP Futures. If anyone's wondering, as always, we don't give investment advice here, but that's the personal one that I use. I like them. but they're only a brokerage. So it's really IB has it's their front end platform that really got you. So sorry, blank usually buys and sells stocks and currencies through his Interactive Brokers account, but he couldn't resist his hand at trying some oil trading on April 20th. That just sounds deadly. That's just a bad sentence to start off. He couldn't resist trying his hand. One of the, I know I get sidetracked here, but one of the nicknames, if you're ever in like a trading room, they call crude oil Crudella. That's the nickname they give it because she is fickle and she will get you. You think you've got her figured out, then the next day, boom, wipes out. So the day trader working from his house in a Toronto suburb figured he couldn't lose as he spent $2,400 snapping up crude at $3.30 a barrel and then at 50 cents. Then came what looked like the deal of a lifetime. That's never a good sign when it says what looks like the deal of a lifetime. Buying 212 futures contracts on the West Texas Intermediate for an astonishing penny each. I'm just reading the article here. So what didn't he know is that the oil's first trip into negative pricing had broken Interactive Brokers Group software. It couldn't cope with the pesky minus sign, even though it had always technically possible, though this was an outlandish idea before the pandemic for the crude oil market to go upside down. Crude was actually around negative $3.70 a barrel when Saeed's screen had 1 cent. Interactive Brokers had never displayed a sub-zero price, and oil kept diving at the end of the day to minus $37 a barrel. At midnight, Blank got devastating news. He owned Interactive Brokers $9 million, and he had started the day with just a little over $77,000 in his account. Folks, this is why you don't get in on negative pricing. It's a Bloomberg art. Do not get in on negative pricing. That's what happens. A margin call for $9 million. Woohoo! That's scary.
In the words of Scooby-Doo, rut-row.
Yeah, that is I promise you, I check even if I don't trade, I always check my account each day just so that I don't know what orders I happen to have open. Trust me, I'm always, so that just creeps me out. So, I mean, really, that's, if you're wondering how to get it on negative pricing, don't do it this way. This is not how I recommend it. But I think the next thing we have to get to in random story time is Stu's got a little a rant on basically, I think it falls in line with this Michael Moore special. I'm going to let you just kick this off. What do you got for us? You were fired up about this morning. I got an email real early in the morning, so I know you're fired up about this.
So I want to rant with dignity over this,
okay,
because there is about 1.5 billion people in this world that they have the right to 100% clean energy. And there is the relationship, Michael, that you and I have talked about. 100% relationship between clean energy and elevating out of poverty.
Yeah.
And when I was sitting there kind of looking at this, this COVID is really showing us that we've got to bring all of our manufacturing home.
Mm-hmm.
With manufacturing coming home, that's a great thing. Even our Congress folks are being able to see that. But what is really happening in the green market and everything else is the fact that our rare earth minerals, and I just want to go through some of these stats for you. Rare earth minerals are critical to the green planet and renewables. South Africa is initially disrupted 75% of the global output of platinum. Copper mining in Peru accounts for 12% of global production. Indonesia is the world top supplier of nickel. China alone is 50 to 70% of lithium and cobalt. Michael, how much of all of those are in batteries, in rare earth, in solar panels, and
they're all over. It's the essential piece. And that's part of what we got into in that Michael Moore special was the value chain of these renewables. It's just unbelievable.
And Congo relies on child labor. So as we go through all of these kind of things, Congress is looking at bringing back strip mining to the U.S. That's
strip mining?
Strip mining. So
Yikes.
We need to get rid of pollution, and folks are really wanting the green. And when we talk to Gregory Whitestone, he has probably the best view on that, and that is using power with the best method of being good stewards to our planet. I love his quote. All right.
And this is a shameless plug for Gregory right here. If you can't see on the video, I'm holding up his famous bumper sticker. I love CO2.
Oh, you bet. And so, our marketplace and in clean energy has to have a balance of nuclear. It has to have hydroelectric has to have, I believe in wind and solar in the right policies, but it's got to be market driven. And Michael, I want to throw this out for our future shows and things. Fusion nuclear, I think, is where it's going to be. And I'm also doing a lot of research into hydrogen. I don't have enough specifics on it, but those two, fusion nuclear and hydrogen, are going to be coming up on some of our shows.
Yeah, I mean, nuclear still kind of scares me. I just spent the whole weekend binging the new HBO documentary series Chernobyl. I mean, it's like a mini doc. It's scary what happened there, and it's also kind of crazy because they lay out it's a dramatized movies or documentary series, so it's factual, but but they do a decent job of laying out how actually like a nuclear facility works. Very interesting, very interesting. I didn't know it actually comes down to steam power. When it's all said and done. But no, hydrogen is something that is very interesting. I know that's sort of all the rave when it comes to like the electric car movement or the new car movement where they want to like pump up with hydrogen. I think you couldn't quote me on that. I find it funny that Elon Musk is fighting to get out of California. He's trying to get in. Did you see that drop? He's trying to move his facility from California over to Nevada. Oh, I wonder, he might be coming to Texas. You might have Tesla in your backyard.
Already said it's coming to Texas and Nevada. So, I'll take Tesla out here. I want to interview Elon Musk. I think it'd be fantastic for me and you to interview him.
Yeah, I think we would for sure interview him and see if he's got the time. I'm down. Let's get him on the show. But now hydrogen is something we'll get into. I love it. And, all this, I really, I think you did a good job of talking about sort of the paradigm shift from what the renewable energies, claim to be and what actually happens. I think there just needs to be a little more honesty between how that conversation happens. And I think you'll start to see that. I know this Planet of Humans movie that Michael Moore has dropped is an unbelievable amount of views. It's been widely covered. So I just recommend go checking that out and also check out the special we have dropping. Before we move on to our week that is upcoming in oil, this just grinds my gears. This is stuff that bothers me, and I just had to get off my chest. So May 5th, 8Ks released by Chesapeake Energy. So guys, give you an example, guys. Chesapeake Energy has had a historic collapse in their price in their absolute trading price. Now remember, they did a 20-to-1 stock split, but to give you an idea, 2000, let's just kind of give you an idea here. In February of 2015, the stock was trading at equivalent $3,600. It's now at $1,470. So let's just talk about a historic collapse in a price war. And everybody knows what knows how Chesapeake got here. Doug Lawler, the current CEO, took over in 2013 on top of even a more historic collapse in the price of oil. So this company has been basically, its market share has been wiped out. They completely swung and missed at the natural gas. They were in on natural gas 4 years ago when maybe if they were getting in on it now, it was a good idea. But I saw this in their 8K. And this is what drives people crazy. And this is what drives people crazy when they look at these companies. This is why you hear people say that. This is why when you get on Twitter, you'll hear shale oil is a scam. I mean, that's what you get on. When you go on Twitter, that's what you hear. Shale oil and some of these companies are scams. Well, why? Because look what's happening right now. This is drops in their 8K. May 5th, 2020. The board and this is in the second paragraph. The board and compensation committee, with the advice of their independent compensation consultants and legal advisors. Ooh, that just seems like that's another layer of people to get paid. How do we get in on that, Stu? Can we become independent compensation consultants?
I think we can.
Hire the 360. That's the new deal. The 360 digital closure, but we're going to be independent compensation. Call us up if you're a board of directors, any public company. We will help you set your compensation structure for your exams. We do better just than this because they determined that the historic compensation structure and performance metrics that are currently in place would not be effective in motivating and incentivize the company's workforce. What? Okay, so clearly they've realized that whatever compensation structure they have right now won't motivate the force. So it seems like there's a glimmer of hope, but as always, we know it gets much worse as we read on. Let's look at the senior executives and the named executive officers' compensation. The target variable compensation to certain senior employees, including our named executive officers and designated vice presidents, will be prepaid with an obligation to refund up to 100% of the compensation if certain conditions are not satisfied. I wonder what those are. Those aren't clearly shown. Right. Those performance metrics will never be shown. The total amount paid to these 21 employees will be $25 million. Are you kidding me? We're going to now, are you kidding me?
Breathing is not part of the performance.
No, breathing is absolutely driving down the stock of your company. And it just, this is and Chesapeake, I'm just using this as an example. This can be seen in multiple, I've been poring over these earnings sheets, and they tried to sneak this in there. Item 5.02, you can go look this up on their 8K they released on May 5th. It's just, this is what gives shale oil and gas a bad name, stuff like this. And I know there can be a lot of thoughts on that, but it just kills me. It just kills me. The historic, their compensation structure and performance metrics would not be effective in motivating and incentivize the company's workforce. So we need to give them each $1 million. We need to give them each $1 million. That's the way to do it. From a company that has a free cash flow. You know how much cash on hand they have? This is how much cash on hand they have. It was like $6 million. I don't want to get this wrong. I looked this up this morning. Cash on hand, $6 million. Are you kidding me? Are you kidding me? It's all I got to say.
That gives executives a bad name.
It does. It really does. It gives, and he's a minds guy. It just kills me. It just kills me. But it just kills me. But before we get ourselves in any more trouble than we already have, I think we should go ahead and switch gears into the week that's coming up with oil trading. As always, this episode or in this segment is sponsored by Sandstone Capital Group. These guys do insanely good research and provide all the levels from their energy glimpse solution. I'm telling you, if you guys haven't already called these guys to figure out what's going on in the energy markets, you should do that now. They know, I mean, really, they're some of the top level research guys I've come across. You can call them 949-561-1818. You can get a hold of them. You can also email them, Connor@sandstonecg.com. Really, there's just two stories that I'm watching for sort of this week that I think are kind of define what's happened moving forward. EOG May 8th, so that was Friday, dropped had their earnings call. I mean, and they really came out that they're shutting in production for at least 4 months, and that includes 125,000 barrels a day, which is a big number. It's a big number. It's a good number that's coming off the market. In terms of the production. So it's going to be very interesting to see these EIA numbers. As we know, these EIA numbers have been very slow of domestic production coming off. This is good to see that a company like EOG, who's really in this market in oil and gas, they are a large cap company. They are a buyer. They are somebody who has the market capabilities, has the credit, and has the ability to go out and be a buyer in this M&A space. So the fact that they're shutting in 125,000 barrels, and they're bullish on it. I mean, their quote was from their CEO, Bill Thomas, "We view shut-ins as low-cost storage." That was his quote. It's a great way to manage your business, especially in a price environment we're in. So they see shutting in as a great way to do low-cost storage, which is interesting. That's what these large cap companies are beginning to see. They shut in 8,000 barrels a day in early March. So, I mean, that's why this is where I got thrown off a little bit. This is where when, revisionist history is always 2020. It looks back and says, yes, in early March, it wasn't as obvious to shut in wells. And I've been calling for, 300,000 barrels off the market I was way early to the party. Classic Michael. I was just a little early, and then I leave before everything really gets going. So it's off the train, and now it's coming. But that's where you're seeing these 20,000 barrels were shut in last week. They're going to be moving forward with all of this stuff. They're only bringing about 100 or 485 net wells onto production this year. That's a reduction from 800 net wells they were supposed to bring on. They're also delaying 150 new wells until the second half of 2020, which that's not going to happen. That'll probably be pushed back to 2021. Really what they want to, really what the biggest quote that I saw from this that I think is going to guide things moving forward, our 2020 production profile reflects a rate of return decision. So everyone's going to be looking for which well gives me the best rate of return, and we can argue, till the cows come home about wellhead IRR. I think that's right up there with non-GAAP free cash flow. I don't know what that really means. But that's really what I got out of this. And from this specific earnings that happened on Friday, and I think it's just something to watch for. I think you're going to be seeing a lot of these companies, whether it's these larger companies who have this primer acreage, because I think people are realizing that these shale wells are about the only ones that can get shut in and turned back on with any efficiency. If you don't have any Ferraris, you kind of just got to keep them rolling.
You bet. Our folks over at Premier Oilfield Group, Blue and Frank, that we talked to, really are folks, experts that you got to talk to. I mean,
You
I
have
learned
to.
talking to them on our interview.
You have to. I mean, if you're considering shutting wells in as an operator, I would please call our friends at Premier Oilfield Group. It's much like if you have any questions about ESG, call Tisha Schuler and our friends at Untitled Energy. You gotta call Premier Oilfield Group if you have any questions with shutters. And I think what EOG came with is going to be seen. So I'm looking for more barrels to be talk off the market. Before we get to the international news desk, we still have one more thing that I just think you should be watching for. This gasoline demand is up. We got U.S. refinery numbers that drop, and we are seeing increase in gasoline demand as states begin to reopen. And I think you're going to be continue to see the same thing. I think this next week is going to be very bullish for gasoline demand. I think we're going to see oil continue to creep up. It's an article on S&P Global. I will link it in the show notes. Basically what it does is it goes over all the pads and tells you the actual gasoline demand refinery. The key is pad 1, which is New York in that northeast section. It's seeing a huge increase, which is very good to see, because remember, the northeast and New York state specifically is the one that it's been hit the hardest. So it's really, 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 really good to see the New York side of the demand come back, because that's a key driver. I think we've seen California and the west side of the country continue to kind of open up. Texas obviously is fully opening up, and we knew in those last 2 Spruill interviews, traffic consumption was up 3%, but it's good to see that reflected in all of these pad increases, which is really, really, really nice. The capacity, Delaware City, 182,000. That is a great increase that you need to see in those numbers. So I'm bullish now. I think the reverse quarantine is happening. I think it's happening. I think we're starting to come out.
You're right about that, and it's a little bad news for our tanker that you and I have sitting in the corner. The oil and gas 360 tanker may not, have
Good
the
thing we didn't
storage.
find any investors, because I'm not as bullish on that anymore, because really I don't think we're going to see negative pricing again. I think we're going to now. I mean, it's only May 10th, May 11th. So, oops, we're not recording this Monday. I think you're going to see – I don't think you're going to see negative pricing again, I think the front end of the curve is going to stay positive. I mean, it may go down low, but I don't think you're going to see negative. I know, right after it happened, there in the end of May or in the end of April, people were saying negative 100 is coming for the end of May. I don't think so. I really don't think so. I think demand is coming back. I think people I think the reverse quarantine is happening. But as always, I could be wrong. And if you think I'm wrong and want to debate me, please, we want it on the show. Email me, mtanner@entercominc.com. You can also call me 303-907-6825. You can find me on LinkedIn at Michael Tanner. I'm probably the most available person online right now. So if you need to get a hold of me, go ahead and hit me up. Actually, I need to probably respond to a couple people as it goes. So I appreciate everybody who has reached out to the show. But I think what's going on the international side? I know you've got some stuff on the desk we need to cover.
You bet. Hey, one of our favorite topics is South America. And just released this morning.
We know, not to cut him, but we know why is it? Because our friends from 10X Technologies think that's a hot market. We're bullish as a podcast on that market.
Oh, you bet. And also our friends at JCA, who actually are oilfield service. So oilfield service.
Oh, good to know.
Yeah, is finding that. But Buenos Aires is really hitting it out of the park as far as setting oil price gains. They're actually going to be doing their own mini OPEC, and they're going to be limiting production and setting their own prices off of WTI. I thought that was interesting. The other one is China. Sinopec put in the largest petrochemical port into operation, and they just unloaded the biggest VLCC from the Middle East this week.
Oh, okay. So interesting.
So you're seeing some real interesting things going on internationally right now.
Yeah, very interesting. And that, that global output's crazy. And what's any update on our Chinese media friends? My Mandarin's not going too well.
I think after my last comment saying that I was going to charge him $5,000 for our interview, I heard
Crickets.
I heard nothing.
Crickets. That's all right. That's all right. Well, I think, levels wise on oil, like I said, I've really flipped from a bear to a bull here recently, and I think it's also reflected in the commitment of traders. We'll take a look at. The levels I'm seeing, pivot point right now, 23.52. I mean, oil closed 24.47, opening up here, opens up Saturday or Sunday afternoon. It'll be interesting to see what the gap looks like. Excuse me, got to wet the palate a little bit. I'm doing so much talking over here. But really, you got 24.65. I think is the pivot point. On the upside, I'm seeing 24.74. Obviously, where it's closed at, I think is a good level. 26.69, 29.43. I think your three levels to the upside where you see that much, where you see enough volume. I don't know if we're going to get up to 26, 29 bucks. I don't think we're necessarily going to get below $21. So if that's what you really want to think, I think it's going to be more of a range week next week, especially as we see the roll in USO beginning to happen. If you're a perma bear, I mean, really, you've got a huge gap from 20 to 18 that's going to act as resistance. That's, maybe I'm going to probably put my floor at the mid 18s when you look at just in terms of a volume bet. I don't know if oil's going to get below that, but obviously if it does, it's because storage is going to continue to be a big issue. And I think the EIA numbers that drop Friday or this Wednesday hopefully lend to all of these shut-ins. As we mentioned, EOG is 125,000 barrels of oil a day. That should be reflected in the EIA this week. And if it's not, it'll just grind my gears because they come out and say, oh, we're going to do all of this. And then the actual numbers come out. It's like not to go back to the Michael Moore special, but it's like everyone's saying, it's like all those, green activists talking about 25 to 50% of Germany's electrical output by wind and solar. And then the actual numbers come out and it's 1.5. It's like, well, you said this, but then it was that. It just kills me. It just absolutely kills me. And when we look at the trading calendar, I don't see anything interesting. The federal budget balance does come out Tuesday at 12. So, I mean, if you're just interested in what our balance sheet, the government balance sheet's looking like, that'll be very interesting. Fed Chair Powell speaks Wednesday at 7, so that'll be very interesting to see. Jerome Powell be speaking. I will be tuning into that at 8:30. Obviously, we will be watching crude oil inventories. I'm sure I'll be trading that. Natural gas storage comes out at 8:30 on Friday. But when we look at on Thursday, COT, commitment to traders, really the only interesting thing that happened, swaps were back on the long side, which was good. They cut a lot on the short side. And that basically means companies are getting stopped out of all, they're cashing in all of their swaps because a lot of these swaps were rehedged back, at 20 to 30 bucks. Now that oil's at 20 bucks or 24 bucks, you can see some of those swaps getting cashed in. Managed money or hedge funds, they got long, cut their shorts. I mean, same old story. They're bullish on oil. I mean, why would you not? If it really can't go below zero, I mean, it can, but it can't. Like I said, we have a whole podcast talking about really what that price actually means. It's much like Inception. It's a dream within a dream. There's multiple things to go to. Managed money seeing this an opportunity to buy low and hopefully get out high. On the long side for producers, not much movement. They really got long or they really picked up their short positions, which is telling you they're picking up hedging. It's really all I'm seeing for the week ahead at oil. I mean, the biggest thing is I'm just looking for shut-ins this week. My key thing is shut-ins for the EIA on Wednesday. What's that going to show? What's that domestic production number going to be? It's 11.9 now. It's got to be 11.7 or below. If it's not 11.7 or below, I'll be thoroughly disappointed.
Michael, I think your reverse COVID lockup is about to happen. Folks want out of the house. And I think you're dead on right that demand is going to go up sharply.
I think so, but as we've learned on this podcast so far, I'm generally early to the party. So we'll see when this reverse quarantine actually happens. But we're putting our claim to that stake right now as we move in to checking in with our 360 picks of the week. But first, as always, the lawyers make us say this so we don't get sued. This segment is for entertainment purposes only. Obviously, everyone on this show, i.e. me, Michael Tanner, and Stuart Turley, invest for our own account. We do not manage any outside money. We do not invest or give any investment advice. We do not offer securities or have any involvement in the regulation side of the industry. Investing is risky, and you can lose your entire principal. Stu, you agreed on the week, though. Your side of the portfolio looked good.
I am, Michael. It's kind of weird. Normally, I'm not right on anything, and between my two, you always beat me.
You've been
And
killing it lately.
my LNG is up 2.99%. In phase, which is the solar chip manufacturer. I'm kind of hedging both sides of that bet there. But then you take a look at Geopark, South America, and then you take a look at Rattler and Fang.
Mm-hmm.
Both of those are doing pretty well, 4.2% and 1.9. But Pioneer is also doing really well, and Noble.
Okay.
Tomcat, you want to hear about him?
No, I do. I just, I think you're holding up your side of the portfolio very well. I haven't really made much moves as long as I'm just baking in longer term gigs for us. I love how you're getting in and out for us. It's been awesome. Tomcat, he's bottom feeding, right? That's what it looked like when I saw the notes.
Feeding again, but he also added, I don't. Yeah, anyway, bottom feeding is interesting. In and out, in and out, and he's all green this morning, getting ready for. Um, Penn, Virginia was up actually 13.4%,
Really?
and his other Valero was up 7.6%. But he got back into Newark Resources. It's up 13.4%. So to look at just a little bit, but he gained it more in his bottom feeding.
The lesson with Tomcat is simple. If you have a strategy, stick to the strategy and execute it. It does much better than just firing bullets from the hips. Oh, I like this technical. Have a strategy. If you're going to bottom feed for a week. Find that strategy. Find companies that fit what you're looking for. Set an entry, set an exit, read the technicals, and do what you need. So that's the lesson I take from Tomcat every single week is the methodical approach he takes. It's one of the most – it's a professional take. It's a reason why you want to – I know he sits in on a trading room every day. It's why you want to sit in if you're an active day trader on some sort of trading room because it gives you that structure. Because so you have to treat it like if you're going to day trade. I've lived that life for over a year. You have to treat it like a job every day. You wake up, do your research, get into the room, warm up what the markets are telling you. There's a reason why you have so many screens going on because you're looking for the opportunity. You have to be monitoring multiple markets, not just you don't just pick one stock and say I'm going to trade this one. You have to figure out what market is giving me the best opportunity to make money today. It's really impressive what he does.
Oh, you bet. He is. That's a job.
It is. And we look at my side of the portfolio. I haven't done anything besides, basically do a really green trade on Bonanza Creek. We were in that at 14.89, currently trading at 17.23. I'm just long-term bullish on that. So we're going to stay in that. Natural gas, remember, we have a long-term position I took out. That's at $1.82.6. Right now it's $1.82.3, so we're down actually a little bit. But spoiler alert, everyone's saying natural gas is going to be $3 to $3.50 come this summer. This should be a great trade then. So I'm staying in as the long term. But if these experts are wrong, it'll be fun because I know there are a lot of hedge funds getting long. This commitment to traders on natural gas we'll have to cover that next. We'll cover that on Friday. We'll go back and look at some of the commitment to traders on the natural gas side and see what we can play. I don't have the numbers up in front of me right now, so I don't feel comfortable doing it. But I guarantee you we're going to see a pattern of getting long on natural gas.
Well, that's why you and I are a pretty good team. You balance me, and I somewhat balance your excitement.
Just a little bit. But I think what we need to do right now is we have an iTunes and Spotify exclusive. We're going to go ahead and give our friend Steven a call right now. He's waiting around, and we've got some very interesting things to chat with him about. High-level stuff there from Nick Berry, as always. We just had to get another dig in there at the M&A space. Before we let people go here, Stu, is there anything else we need to chat about?
Well, I'll tell you, it's just going to be more and more interesting as we go forward with the low price of fossil fuels, the low price of coal, and what happens as the market is driven for the dollar per kilobit or kilowatt hour.
Yeah, from a global energy perspective, you're exactly right. It's how many dollars. You're exactly right on that front. So it'll be very interesting to watch. If you take one thing away from this podcast, read the 8Ks just so you know who's scamming you or not. That's all I say. Just do the research. I post all these links. It just, I would say, if you want to know how you come up with all this stuff, just do the research, please. You can find all of this stuff. It's just, we will be coming back into you, this week with some great stuff. We'll be coming back to you this afternoon with our digital ticker. Please subscribe to the show, iTunes, Spotify, YouTube. Every day we're live on YouTube with the digital ticker, which gives both mine and Stu's one big thing for the day and then an overview of what some of the big pricing is. Really a great way to stay updated on everything that's energy finance. And with that little shameless plug, we are officially going to let you guys get back to work here on this Monday morning. Happy Mother's Day out there yesterday to all of the mothers, and we really appreciate everybody who has reached out to the show. We're going to let you get back to work and see you this afternoon for the digital ticker.